Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update is for Monday, April 26th through Friday, April 30th, 2010. Well, folks, as we get into this weekend technical analysis update, we're going to discuss the technicals going into next week from last week's historical viewpoint and discover where this market is most likely headed. First of all, what we want to do is look at last week's charts and see exactly what the market did. How did it respond overall? If you look at last week and we go a week ago from last Friday, what you can see is the market took that heavy dump on the 16th of April on the back of that Goldman Sachs civil fraud case. And again, shocking the markets a week ago from Friday. The markets did sell off very, very sharply on that, coming all the way down into a key white trend line. Notice the white trend line here sloping up. This white trend line on the 60-minute, when I flip to it, will become extremely important. And so please be aware of that, as we'll focus on that in a little while. Now, that Friday sell-off turned into a little bit of a dump on Monday. Here's Monday. You initially gapped lower, shot up into the 50-moving average, as you can see, then reversed to the downside, coming all the way down into a key level, the 118.55, 118.50 level on the SPY. Off of that, you got a nice little bounce, a little bit of a double bottom, and that put the bottom in for the week. So the week's low was made on Monday, folks. Off of that, you saw a hardcore move to the upside. The market's closing basically flat to positive on that Monday. Tuesday, you had a gap up following that strong move on Monday. Oftentimes, you'll see that when you have a key reaction late in the day where you have a strong buy program come in, it will oftentimes turn into a little bit of a gap up the following day. That's exactly what ended up happening. The markets ended gapping up and started to move higher all day long, closing to the positive side. Wednesday, we saw basically a gap higher or a little push higher, and then a little bit of a sell-off, choppy trading, and ultimately, before the end of the day, the markets again were saved, and we continue to see this type of activity. The markets being saved late in the day. Here it was on Monday. Tuesday, you ended pretty much near the highs. Wednesday, you sold off. Midday, came down into the late hour, around 3 o'clock, and from 3 o'clock into 4 o'clock, 4 p.m. Eastern Time, the market was saved again. Same thing happened on Thursday. If you take a look at Thursday, the markets gapped lower here on the back of some kind of interesting economic news, some earnings news as well that was not that great. The markets pushed lower, came right into this white trend line again. You can see this white trend line again continues to hold the markets right around it. Monday again, you touched it at the lows. Last Friday, a week ago from Friday, you touched it at the lows. This Monday, you pierced it, came back up, rallied above it. You cannot close a day below this white trend line. And this white trend line, as I say, will be a key data point when we look at the 60-minute chart. You will want to know this right trend line, and I'll go over it in specifics when we look at that on the 60-minute chart. So again, coming into Thursday, the market moves down into it, cannot get below it, and before you know it, the market is saved again. Over and over and over again, the market's being saved late in the day, and you have to just tip your cap to the market right now as the resiliency, whether it's PPT, Plunge Protection Team, whether it's Federal Reserve printing of trillions of dollars, whatever it may be, the liquidity in this market is forcing it up and buying this market into the close every single day that it's moving to the downside early on. And you can see it basically any day during this week. There was never a day where we closed at the lows of the day. Notice again, here's Monday. Boom, right back up. Tuesday, closed near the highs. Wednesday, you started up, sold off, but before the end of the day, the push back up. Thursday, again, here you started out down, and before you know it, you rallied to the upside. And of course, Friday. Friday was a very nice day. Light volume on Friday afternoon as most traders took off, and sure enough, that enabled the markets to float higher most of the afternoon session, really starting around 11 or 12 o'clock in the morning. As you can see here, the low was put in, nice little bottoming tail, nice beautiful bottoming tail there, and again, a move to the upside, closing pretty much at the highs of the day. Technically speaking, the markets ended substantially higher for the week. That is a bullish signal going into next week. You still have no in-the-money stocks confirmation signal out there, and that continues to tell us that the market can continue to grind higher as long as you do not have confirmation to the downside, which we have not had literally since the low was put in back on February 5th, 2010. And that's amazing, folks. It's probably the longest period of time that I have not seen two back-to-back days where you actually had a confirmation signal in the markets with a change of direction. And it's really held up as the best key in the money stock signal that we have out there. And again, no one else has this type of signal out there. This is perfectly in tune with what in the money stocks methodology does teach. So remember that, folks. It is big. Confirmation in the money stocks confirmation signal. In any case, you can see again the Friday sharp sell-off. By the end of the week, you ended up here at the highs of the week and the highs pretty much of the year, 52-week highs on the market. Your levels, again, going into next week will be a pierce of 122 on the SPY. We closed at 121.81, so you're really just about 25 cents away from that even number pierce on Monday should we get it. And again, we'll watch what the futures do Sunday night coming into them, and again on Monday morning. Monday morning has a lot of key earnings data, and again, we'll have earnings all week long that will be very, very important to this market. We have to pay attention to earnings, guys. In addition, there is some economic data this week. You have the Federal Reserve meeting for their interest rate meeting. We'll get the word out on, I believe, Tuesday or Wednesday afternoon, and I'll check that in a little while as we get further into this video. All right, so that's your intraday kind of analysis on a 10-minute basis. What I want to do is flip to the 60-minute because I'll show you exactly how important the trend line is. Remember that white trend line on the intraday 10-minute? And let me just flip back again to show you this white trend line right here. If you go to the 60-minute chart, this white/green trend line is the exact same trend line. I want to show you something. If we scan all the way back here, folks, look at how far back this goes. I mean, it is amazing. You start this trend line all the way back here, and we can even go back even farther. It goes all the way back to mid to late March. So we're talking about a month-long trend line now that has not yet been confirmed below on the downside on the 60-minute chart. Now, confirmation on the 60-minute, it's the same general indicator, but it's based off 60-minute candles instead of a daily confirmation signal based off a daily. So 60-minute, in theory, is easier to get than the daily because the daily is a day and the 60-minute is just 60-minute candles. Yet you still have not had it since mid-March. Right here, the trend line begins. You touch it here, 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 here again, then you pierce it here but never confirm below it, pierce it again here, and sure enough, the market rallies up. And you can see again how many times this trend line has stayed above, or if it got below, it never confirmed below, and the market continues to rally off that trend line. What you're looking for next week, if you're looking for a short-term down move, maybe for a day or two in the markets, you're looking for a move below that green trend line, and then sure enough, what you want to see is confirmation on the 60-minute chart. Now, again, if you're unclear about confirmation, it's all about, we're talking about it every day in the Research Center, folks, and again, you can join that for $49.99. There's plays in the hot charts and alerts that go out every day to look for swing trades, long, short, you name it, small cap plays that have been so hot. We've had winners of 100%, 500%, the hidden gems recently, and 20%, 25%, 30%, 50% winners constantly being spit out in the hot charts and alerts. And again, we'll be posting more and more small caps this week as well as large cap plays on the swing trade basis per the day. All right, so stay tuned again for hot charts and alerts. Also, you can get the Pro Trader watch list, which is, again, a compilation of every stock that are on the Key in the Money Stocks Pro Traders list that they're watching for a possible trade. And again, also all the other services included under there as well. Now, going into this chart here, folks, technically speaking, that's really the only thing I wanted to kind of discuss for you guys, which is this trend line. Because as you continue to move up, you can constantly, as long as you stay above that green-white trend line that I just pointed out, you have to continue to believe the market can inch up. All right, as long as that does not break. If you can confirm below that trend line, then all of a sudden the whole picture changes. So right now, as long as it stays above, continue to think that the market can grind up, the market can get late-day buy programs, the market can be propped up, the market cannot necessarily fail until it proves to you by confirmation signal. All right? Now, a couple other things that we want to go over. Let's go over the key data points this week on the economic and earnings alerts. And to do that, you guys can all view them at the In the Money Stocks economic and earnings alerts page. It's under free services. Everyone has access to it. That's what's going to tell you the key earnings reports this week that will have a play in the market, as well as the economic news. Economic news, nothing really on Monday. Tuesday, Case-Shiller 20-city index, along with consumer confidence. Wednesday, crude inventories with the FOMC rate decision. So Fed has the rate decision on Tuesday at 2:15. On Wednesday, 2:15 p.m. Eastern Time. Thursday, continuing claims, initial claims, GDP on Friday, chain deflator, employment cost index, Chicago PMI, Michigan sentiment. So later in the week, there seems to be more data. Early in the week, very, very little data. Earnings-wise, though, Monday does have a key couple ones. Before the bell, you have BlackRock, you have Caterpillar. All right, those are big ones for the market overall. Monday after the close, you also have Texas Instruments. That will be a big one for the tech sector. Tuesday, it looks like 3M is a good one to watch. Coca-Cola as well. Let's see, Ford Motor Company as well. Let's take a look, scan through. That looks like about all the big ones. U.S. Steel's on Tuesday as well, which could be of interest. It's kind of interesting. Just, again, not a big market mover, but just because that stock has been such a wild ride play. Looks like Wednesday you have Baidu, BIDU. That's going to be interesting to me. Very, very interesting, along with Corning, Barrick Gold for solar. Yeah, there's a bunch of them. And again, you guys can go to your economic and earnings alerts page at In the Money Stocks and view all the key earnings. We compile all the ones we think will be somewhat market movers or important ones for the market or their sectors, and you can continue to view those. All right. Now, just lastly, what I want to do is go over a couple key stocks. Keep an eye next week on Goldman Sachs. Goldman Sachs, guys, we'll flip to the daily for this. Goldman Sachs, again, still under pressure, still under alert, kind of over here. Your levels on Goldman are going to be right here, 155 and then 148 if it starts to fall. Now, why are you watching Goldman? Well, basically, there's that civil fraud case hanging over that. If financial reform, which it does look like there's more and more talk over this weekend, comes out, that could put more pressure on the financials as well, and could be something that stops the market in its tracks. But again, without confirmation, don't jump to any conclusions. Next week, again, Baidu's going to be an interesting stock to watch on earnings. JP Morgan, again, very, very high on the charts, although it has had a nice little pullback, as you can see in recent weeks or in the last week or so. All right, that's all for today, folks. Enjoy the week. Let's make some money. Join the Research Center. Join the chat room. I'll be in that chat room live throughout the day, as well as giving key plays out live in the Research Center hot charts and alerts, and updating you guys with 40-minute nightly videos in the nightly technical analysis videos. All included there, $49.99. See you there. Take care.